We're not going to have Russia or China occupy Greenland, and that's what they're going to do if we don't. So we're going to be doing something with Greenland, either the nice way or the more difficult way.
Clearly threatening to occupy a country that is part of, through Denmark, the NATO alliance has implications that run far beyond just suggesting an increase in defence spending. Hi, I'm Chris Beauchamp, Chief Market Analyst at IG. We're going to watch a speech by Donald Trump. We're going to talk about what it means, and we're going to try and think about the implications for markets, what it means for you as an investor, and how you can process what he says in the speech to help build a framework for investing. And now we'll look at the first clip.
The policy question. How much money are you thinking of giving people in Greenland?
Oh, good. So we're talking about Greenland. Okay. Latest madness.
I'm not talking about money for Greenland yet. I might talk about that. But right
I hate
now,
the way they call it
we
Greenland.
are going to do
Really annoys
something on
me.
Greenland, whether they like it or not, because if we don't do it, Russia
This is his latest bugbear,
or
isn't
China
it?
will take over Greenland, and we're not going to have Russia or China as a neighbor. Okay?
They already have Russia as a neighbour. It's called Alaska and the Bering Strait.
I would like to make a deal, the easy way, but if we don't do it the easy way, we're going to do it the hard way.
So we're threatening a NATO member at this point.
Denmark too, I have to tell you, and they've been
Oh,
very
good.
nice
We'll be
to
so
me.
pleased.
I'm a big fan, but the fact that they had a boat land there 500 years ago doesn't mean that they own the land.
People in glass
We had
houses
lots
shouldn't
of
throw
boats go
stones.
there also. But we need that because if you take a look outside of Greenland right now, there are Russian destroyers, there are Chinese destroyers and bigger.
No, they're not.
There are Russian submarines all
They're
over
nowhere
the place.
near.
We're not going to have Russia or China occupy Greenland.
Nobody knows
and
where
that's
he's got
what
this
they're gonna do
possession
if we
from.
don't. So we're going to be doing something with Greenland, either the nice way or
But it's going to have
the more
defence
difficult
implications.
way.
You want to blow up the most successful alliance of the past 80 years.
Please, go ahead, ma'am.
So how do we think about this for markets? Well, Trump says a lot of things, but Greenland is his new obsession, and clearly threatening to occupy a country that is part of, through Denmark, the NATO alliance has implications far beyond markets. But if we're thinking about it from the investment perspective, if it were by some terrible moment to mean that the US and Europe were to split, European defence spending would have to rise even more than is already expected to. So you're looking at the defence sector. Both European companies, Rheinmetall, BAE, Rolls-Royce, but US ones as well, because Europe is going to have to buy the stuff from somewhere. It also means, I suspect, that we're going to see a lot more infrastructure spending in Europe to try and compensate for the loss of the US. The other issue that inevitably crops up with this kind of discussion is what it means for the Treasury bond holdings of various states if they fall out with America. And the obvious idea is that you might dump all those holdings to put pressure on the US government. It's something that came around back in April of last year with the tariffs and how China would dump US bonds to put pressure on the US in tariff negotiations. It's possible, of course, anything is possible. But when you dump something, if you hold a lot of it, that tends to drive the price down, which has an impact on the value of that asset and the money you'd get back from it. It's viewed as kind of a nuclear option, if pun very much intended at this point, but it's unlikely simply because you don't want to undermine the value of the asset that you hold, and dumping those Treasury bonds would do that. And in any case, chances are they'd get snapped up by everybody else anyway, because Treasuries are not just an asset in themselves. They're essentially an alternative to the US dollar in terms of liquidity. They're one of the other most liquid assets around, and they're very handy for everything else in the globe, funding transactions, everything. So you could easily imagine a scenario where, say, Europe did get rid of its Treasury bond holdings in a moment of madness, but somebody else, the Chinese, for example, are more than happy to pick them up instead. But this one has major implications for confidence in markets. And if the US president was willing to dismantle one of their key alliances, I think it also has a lot of consequences for what you think about the US and the retaliation if you have a split towards the US from Europe, if they have another falling out of the tariffs. What keeps the Europe and the US together at the moment is NATO, and that limits Europe's response to US tariffs. But if there's no NATO, there's a bigger response from Europe in terms of tariffs imposed on the US, on US tech companies. So this one has implications that run far beyond just suggesting an increase in defence spending. Now we're going to take a look at another Trump press conference. This time we're talking about Cuba, Venezuela, and oil prices.
Something that they never had really here is tremendous security. You're going to be very secure, very safe, physically safe, in addition to financially safe. So it's good to see you, Harold. Thank you very much.
This is the power with all the oil and gas people, isn't it?
Cuba have to do to avoid the same fate as Venezuela? What does Cuba have to do?
Well, Cuba's in bad shape. Cuba relies
Are you going to pick on another
Venezuela
country,
for
Mr.
oil
President?
and for money. And nobody really knows what's going to happen with Cuba. They're doing very poorly. They really
But there's no oil in
third
Cuba,
world all the
is
way.
there?
And we have a lot of great Cuban Americans, and I would say Marco fits very solidly into that category. And I might ask you to say a few words about. We were discussing it.
Ah,
before.
there's
Cuba
little Marco.
is a very different. They don't have energy. They don't have oil, but they
The hostage
live
situation in the
off
Trump
of
administration.
oil from Venezuela, and what they
You
do
notice how
have is
none of them
very
are taking the
strong people.
tops off their drinks? It's really
And,
interesting.
very powerful
Weird.
people militarily, and they would protect the people running Venezuela, and they would take in a lot of money from Venezuela. Now they don't have that. They won't be taking in any money. So, Marco, what do you think?
Well, I mean, the fundamental problem in Cuba is that it's run by incompetent people that don't know what an economy looks like, much less a functioning one. They've made a choice.
Again, people in
and
glass
they'd rather
houses
have
shouldn't throw
political
stones.
Control over their people than they would to have an economy that functions. And they've gotten away with it for 60-something years because they've had donors, the Soviet Union, and now most recently Venezuela. But that's now gone.
The suggestion
So
is
the people
that
in
they
control
would
in Cuba have a
do
choice
what
to
they've
make.
done to
They can
Venezuela
either have
and
a real
Cuba,
country with
and
a
thus
real
have
economy where their
two
people
South
can
American
prosper,
countries
or
they
they
need to
can
run.
continue with their failing dictatorship that's going to lead to systemic and societal collapse.
This one talks about Trump potentially doing the same to Cuba as they've done to Venezuela. I suppose for investors, it's more the question of how the US is now behaving as a very different power to what it was over the last, say, 40 years. With Trump in charge, how does this reorder the globe? And is South America essentially now the president's backyard and a playground to do with as he wants? With Venezuela, it merely looks like he's changed the person in charge, and they've already started selling on the proceeds of Venezuelan oil in a kind of to the victor, the spoils moment. US oil companies have been the big beneficiary from this. Everyone else has been shut out, and it's unsurprising that you might get people like Chevron and Exxon really benefiting, although even they are showing caution because it's never as easy as simply moving into the country, because the administration of Venezuela hasn't really changed. You've just changed the person at the top. So it doesn't necessarily mean that suddenly Venezuela is going to become a playground for US business. But I think it shows you that this is a US administration that's prepared to break rules, ignore rules, and essentially use the flex that given to them by the US military to impose their will. It's just a question of what comes after that, really. And once you start breaking rules, it's very hard to restructure them. And a lot of the global trading system, the global market system of the past 40 years has been based around the idea that this US is this benevolent hegemon that is going to play by the rules, because it also benefits the US. And as we saw with that Greenland clip, once you start falling out with allies, that has consequences that become rapidly difficult to price in for markets. And that's when you perhaps get certain bouts of volatility and uncertainty, because people try and work out what this actually means. And the blunt truth is that no one really knows at this point. And finally, we have Donald Trump once again, this time not talking about oil and gas, but talking about Apple, introducing the CEO of Apple, a man we know as Tim Cook, but a man Trump once described as Tim Apple.
Other countries a little bit. I won't say which ones, but a couple. And they're coming home. $600 billion. It's the biggest there is. The company is also unveiling its ambitious new American manufacturing program, which will bring factories and assembly
idea
lines
to bring back
across our
factories into
country,
US
all roaring
from
to life.
overseas.
Areas that were not
Something
doing
that
so well or doing very well. We
may
have
not even begin to happen
about
by the end of his
$17 trillion
administration.
coming
But it's
into
big
the United
numbers.
States, which
It
is
sounds
more
good.
than ever before. It's never even come close. There's never been anything like it. Even you, that's even a lot of money for you. But we have
It's
commitments
the constant
of,
hyperbole with this
more than
administration that gets me down more than anything
$17
else.
trillion. That was as of a couple of weeks ago. These investments will directly create more than 20,000 brand new American jobs and many thousands more.
This is the news that everyone's iPhone is going to be made in the US and thus cost 4 times as much as it does now.
Texas Instruments and Samsung will all deal
Which
in
is
that
the part
world.
they haven't really talked about.
As part of this historic
oddly enough.
commitment, Apple will massively increase spending on its domestic supply chain for the iPhone and will build the largest and most sophisticated smart glass production line in the world in Harrodsburg, Kentucky, which is a great, actually, I did very well there. I like it because I see I did very well there. I did very well in Kentucky. but
Always
it's a
about
great
the
place.
poll
You're gonna be
ratings.
very happy.
Always about
I
the
thought
poll.
maybe while we're up, I'll interrupt my own speech by you might show them a little bit about the product that you're going to be doing in Kentucky, Tim.
Absolutely. Do you mind if I step over
Yes,
here?
please.
Oh, is this where he gives him the present?
California
He bribes the president with something.
comes on the Corning line. It's engraved for President Trump. It's a unique.
Yes, he literally bribes the president of the United States live on air with some kind of gift. It's quite the most remarkable TV.
That works at Apple now.
He's done well.
Designed to
There you are, you've got Lutnick and Besant in the background, the lovable goons of the administration.
Utah. And is 24.
Of course it's solid gold, because what more would you want in the White House? An Oval Office is already full to the brim of gold. Don't break it, Tim. Don't break it. You've got to hope you practice this.
There we go. Congratulations, Mr. President.
We've given him a prize. That'd make him happy.
Great people of Kentucky.
Trump is talking here about bringing manufacturing, specifically Apple manufacturing, back to the US. It's part of his long-running idea that manufacturing in the US has been hollowed out by the last 40 years of free trade policies, which in itself is true. But the question is really what this means for Apple and other tech companies, and indeed plenty of the other US companies that have built their margins, their earnings on manufacturing things overseas where it's cheaper. If you bring it back to the US, assuming these factories ever get built, it means it costs more. It'll cost more in terms of wages. It'll cost more in terms of product. And that means the cost of these goods goes up, and that hits their margins, because clearly the consumer can't wear the increase entirely. If prices go up, it means inflation goes up. And the risk there is that then you have an inflationary situation in the US, which the Federal Reserve has to respond to, which tips us over into yet another argument between the Fed and the White House over inflation and whether the Fed should continue to respond to inflation if it keeps rising by raising rates, which the president doesn't want them to do. But the theme has been the last year of bringing manufacturing back to the US. It's laudable in itself. Western countries have seen their manufacturing base hollowed out, but it's hard to really work out the implications for a sector, it's particularly tech, but plenty of others as well, that have built their business operations on low margin operations overseas that they can then use to increase profit margins to deliver returns for shareholders. So the risk is that share prices don't show the strong returns they have over the last 20 years because companies aren't making as much money. That's it for now. Thank you for joining us, and we'd like to thank the Donald for this unending fount of investing wisdom. We'll be back with more moments to break down to help you understand the world of investing and how you can build your own framework. Don't forget to like and subscribe.